We see why these are named candle or candlestick charts. The individual lines often look like candles with their wicks. As mentioned in the introduction, what are candlesticks? We will use the terms candle and candlesticks interchangeably throughout the rest of this book. The Japanese say the real body is the essence of the price movement. This reflects a central concept about the power of the real bodies. By looking at the height and color of the real body, we get an immediate visual clue whether it's the bulls or the bears who are in control. As such, candle charts will make market analysis faster and more efficient. Using the long white candle in Exhibit 3.4 as an example, who is in charge? Like I said earlier in the other video, the bulls, the bears. Obviously, it's the bulls, since on that session the market opened near its low and closed near its high. Likewise, a long black candle in Exhibit 3.5 is a visual representation that, at least for that session, the bears were in control since the market opened near its high and closed near the session's lows. Candle lines can be drawn using any time frame, from intraday to daily to weekly charts. For example, a white candle as shown in Exhibit 3.4, if based on a daily chart, would mean that the bottom of the real body is the first trade of the day. Remember, in this example, a white real body signifies the open is at the bottom of the real body, and the top of the real body is the day's close. Because the white candlestick is the bull, that's the one that's going up like MJ. The intraday peak and trough are the tip of the upper shadow and the bottom of the lower shadow, respectively. The upper shadow and the lower shadow are, once again, those are the thin lines at the top of the real body, the rectangular box. Similarly, a 5-minute black candle line tells us that the open of that 5-minute period is at the top of the black real body, and the close is at its bottom. The high and low of that 5-minute session will define the upper and lower shadows. A practical application of the real body is using its size as a barometer of the market's momentum. While a long white and black candle shows the action as one-sided, we get a clue that the prior momentum may be losing force as the real body becomes smaller. The Japanese term for a small real body, black or white, is called a spinning top. Exhibit 3.6 shows examples of spinning tops. The lines illustrated in Exhibit 3.6 have upper and lower shadows, but the size of the shadows are not important. It's the small size of the real body that makes these spinning tops. Once again, the real body is the rectangular box. Spinning tops are components of candle formations, including morning and evening stars, harami, hammers, and others, terminology that will be discussed at length in later. Did you notice something about the real bodies in Exhibit 3.7? There aren't any. These lines are named dojis. The plural of a doji is also called a doji, and they represent a session when the open and close are the same or very close to one another. Dojis have implications as a reverse signal. We will look at this aspect later in the chapter and in greater detail. In Exhibit 3.8, during the week of April 1st, a descent began near 315 with a series of black candles. As the decline ensued, the real bodies increased in length, reflecting increasing bearish momentum. The emergence of the spinning top on April 7th changed the technical picture from one end which the bears have complete control to a market where the bears are losing domination. Since the small real body was only one session's activity, it should be viewed as a tentative clue. Nonetheless, it was the first sign of a potential reversal. This represents a major advantage of candle charts. They will often let you spot potential market turns as quickly as one session. Let's get into it.